Hello and welcome to this week's update. So, what's happening in the macro and how does it affect crypto? Came to you from Singapore last week, Dubai this time. So, what's going on out there? There is a confused market. There is a huge number of people out there believing we're rolling towards a recession in the US. And of course, that would have serious implications, that the stock market will be affected, and there would be a very significant recession and a pullback in assets in general. And within that framework, then that the crypto and altcoin season is coming to its end in October, and we move back into the normal 4 year cycle of going into a bear cycle from now. Of course, there are others very much saying that the macro looks great, that okay, the jobs are weakening, but a lot of those jobs are being taken by AI, which means it's actually cheaper for the companies to run, which means their profits will be higher, and that then allows for the stock market to run like it's running. Another part within that is they say that the consumer is still good and healthy and spending. But where I think all of this needs to be looked at is this piece. 50% of all consumer spending in the US right now is done by the top 10%. The top 10% are feeling wealthy because they're the ones that buy into assets, the stock market, and the stock market has been flying for the last number of years, so they are making money. So whether there's inflation there or not, they're okay. They're the same people buying into the stock market and pumping the stock market further. The people at the bottom end who don't have assets, the inflation is absolutely killing them. They don't have these assets that are going up in value, and so that's where the recessionary risks come in. I don't think it's the recession itself that's going to cause the problem here. I think at some point, will the bubble burst in AI? And if that does, that's what's pumping the stock market. If the stock market was to have a significant correction, the consumer spending would then reduce significantly, seeing as 10% are doing 50% of all spending. If that were to slow down, that is what I think will move towards the recession. So I actually think the stock market pullback would come prior to a recession rather than the other way around. But of course, no one knows for sure. But if you look at the macro, there's a huge amount there to say that things are lining up exceptionally well within that space. And that being the case, the bull market continues, the 4 year cycle is dead. And certainly, there's plenty to show that that may well be the case. If you look at the business cycle, so the ISM Purchasing Managers Index has been a really good key indicator for risk on assets to do well or not, depending on whether it's at 50% or above or not. If it's above 50%, that's moving towards a territory where risk on assets can do well. When it's below, they tend to pull back. And you can see here, every time it's gone over the 50%, we've had a bull market. And each time then we've been in a bear market, it comes back down below. Right now, it's right on that 50% mark and looking to go up. So good sign for that. And all coins tend to do really well in that particular situation. Another big positive is, for risk on assets, the rate cutting cycle is only just starting. The Fed Reserve's minutes of the September meeting show that policymakers anticipate further interest rate cuts this year. So they're expecting two more this year and many more next year, making money cheaper. When money gets cheaper, it gets borrowed and spent, and that drives on risk on assets. Liquidity is rising. When liquidity rises, Bitcoin tends to rise. We can see here the global M2, which is the black line here. You can see how rapidly it's grown, and you can see in the orange line Bitcoin very closely following it. It follows it with a 102-day lag, meaning that within the next 102 days, it should, in theory, if it follows suit, Bitcoin should increase, and that would predict Bitcoin to go to 170,000. That would be a big move from here and would be huge for the crypto market and, of course, risk on assets in general. On top of that, it tends to follow gold. So here's the gold versus Bitcoin performance. And again, there's a 200-day lag in this. But if if Bitcoin is to continue following gold as it has done, as you can see through this chart fairly closely, then again, there's significant upside to be had from where it is right now. So, as we said, the global money supply leads Bitcoin, and by proxy, the entire crypto market. And gold also tends to lead Bitcoin. And as of course we've seen, M2 money supply has grown rapidly, and the price of gold has gone through the roof. So, growth in the US is solid. Inflation isn't out of control. So here's trueflation, and in trueflation, it's been averaging in around that 2% mark, which is where the Fed have said they've always wanted to be anyway, but they're using a different indicator. Many believe this to be a closer and more accurate indication of where inflation truly is at, and based on that, it's in around the 2% mark. There's little euphoria in the market. There's certainly not that euphoric feel that you would tend to expect inside in the bull market. Many of retail haven't even come back into the market yet. So that would be another sign of hitting the top. And there's very little leverage actually in place, which again is something that happens very much so when we're at the top. So, in other words, are we at the crypto top here? It seems unlikely with all that information. Will there be pullbacks on the way? Absolutely likely. If this is to go for a run for the next quarter and maybe into the first quarter of next year, it doesn't go in a straight line. There will be significant pullbacks along the way, but overall, it appears it's lining up for a very positive rally. Of course, this is all dependent on the general economy holding good and steady. Japan surprise. So Seni Takanachi was the shock result for the new Prime Minister of Japan. And what was she running on? She was running the market hot. The same as the US is doing, the same as Europe's doing, the same as China is doing. Now, Japan have had a surprise woman coming in to be Prime Minister, and she has very much talked about spend, spend, spend. And if you think the debt to GDP level is high in the US, which it absolutely is, it's 120%. In Japan, it's more than double. It's 250%. This is crazy stuff. All over the world now, they're just reducing interest rates, making money cheaper. The money printers are going to come on, and all this is going to do is create even more debt out there, and they're trying to run the economy as hot, and gradually make the value of what's owed less and less. The only thing this guarantees us is debasement, i.e., if you're holding dollars, you're holding euros, yen, and quite honestly, any other currency around the world, it's highly likely that that's going to get devalued over time. The US dollar, for example, has been devalued by 47% in the last 4 years. 47%. In other words, whatever would have cost you $53 today, 4 years ago, would now cost you $100. It's crazy stuff. But that's what's happening all over the world. How do you protect yourself from that? Buy assets. One of the ones that we spoke about 2 years ago prior to all of this was buy gold, buy silver, buy the physical asset, because that holds its purchasing power. The one thing we're certain of, and we've seen very clearly, the euro, the dollar, and all the rest, the currencies don't hold their value. Money does. And the only true money is gold and silver. And of course, Bitcoin, many believe, fit into that slot now as well. And so it's likely we see Bitcoin run. And of course, we know that tends to carry the rest of the market with it. We see ETFs are coming thick and fast. We already have loads of them in Bitcoin and Ethereum. There's many more to come. They believe there's going to be a huge number more announced as soon as the government go back to work. But the expectations here are there's going to be many more now in Solana and Dogecoin and Ripple and so many more, the top 10, top 20 and so on. That's just bringing more and more money into the equation. But on top of that now, there's staking being added in. So not only can these institutional buyers buy into the potential upside of the underlying asset, be it Ethereum, Bitcoin, etc., but now in both Ethereum and in Solana, there's going to be staking. So you're also earning a income, if you like, or a reward. So it's just, there's huge money flowing into the system. And then on top of all that, we can see the supply of Bitcoin is just getting ever smaller on exchanges. Now there's barely 14.2% total supply. And since January, there's been nearly 250,000 Bitcoin worth over 30 billion has been pulled off the market. Are we going up from here? Everything suggests that we do. If the general overall economy or there's no mad wars or anything like that to really, throw a spanner in the works. Other than that, this looks like it's absolutely upwards from here and probably for a number of months. Make sure you're well positioned. But of course, if you're in a good position of making profits along the way, make sure to take some as you go. Not financial advice on any of this. Best practice is what it could be seen as. Hopefully found that useful, and we'll see you all on the next one.